Welcome back to Talk Tickers. We do the earnings call deep dives here, so you don't have to. Today, we are going to be breaking down Devon Energy's Q3 2024 performance. Fresh off the press from this morning, November 6th, ticker symbol DVN. And this one is a gusher of interesting info, especially if you're looking at the energy sector.
It really is. We're talking record-breaking production numbers, a major acquisition they just integrated, and a whole lot of cash swirling around. Lots to unpack for sure.
Okay, so let's start with the headline. Devon just hit an all-time high for production, blowing past their own guidance. Think about this. Almost 750,000 barrels of oil equivalent coming out of the ground every single day.
It's incredible. And it's not just a lucky streak. Part of this surge is coming from their operations in the Delaware Basin, a section of the Permian Basin down in Texas and New Mexico, which is already known for being super productive. But they also just folded in this massive acquisition, the Grayson Mill deal, which basically tripled their footprint in the Williston Basin, that's up in North Dakota and Montana, where the Bakken Shale formation is. So Devon's hitting it big in two of the hottest oil and gas plays in the U.S. right now.
Okay, so they're pulling all this oil out of the ground, but are they doing it efficiently? Because just spending a ton of money to get more oil, that's not a winning strategy long term.
That's where it gets really fascinating. Devon's actually reducing the number of drilling rigs they're using while boosting overall output. It's like squeezing more juice out of each orange, but on a massive scale.
Okay, hooked. How are they pulling that off? Is this some kind of new technology?
It's a combination of things. They're pioneering the use of horizontal drilling combined with multi-stage fracturing. Picture this. They drill down, then turn sideways to follow the oil and gas deposits underground, kind of like threading a needle through a layer cake. And along this horizontal well, they fracture the rock at multiple points, which allows the oil and gas to flow out more easily. This lets them access reserves that were previously unreachable, boosting production significantly. They're also getting much faster at drilling and completing these wells, saving them time and money.
So it's not just brute force drilling. It's about working smarter, more strategically. But that leads me to a question. All this efficiency, all this production, where's the money going? Because I know you would be curious about that if you were looking at this stock.
Absolutely. And this quarter, Devon generated almost $800 million in free cash flow. Now, for anyone who's not familiar with this term, free cash flow is essentially the cash a company has left over after paying for its operations and capital expenditures. It's like your take-home pay after all the bills are paid, but on a corporate level. And it indicates how much money Devon has available to reinvest in the business, pay down debt, or return to shareholders through things like dividends and buybacks.
Okay, $800 million. That's a lot of cash to play with. What are they actually doing with it?
Well, they're doing a bit of everything. They're rewarding shareholders through buybacks and dividends, but they're also using some of it to pay down debt. It's a balancing act, keeping investors happy while making sure the company is financially solid for the future.
So it sounds like they're trying to strike a balance between giving back to investors now and building for tomorrow. But let's talk about that Grayson Mill acquisition. It was a big move, almost tripling their presence in the Williston Basin, like we mentioned earlier.
Yeah.
Was it the right move at the right time?
That's the billion-dollar question. And early signs are pointing to a yes. The integration seems to be going smoothly, even better than expected. And they're already projecting a significant bump in production next year, 2025, thanks to this deal. They seem to have snagged a valuable asset at a decent price, and they're already squeezing even more efficiency out of it.
So they're producing a ton of oil and gas. They're doing it efficiently, and they're using their cash strategically. It sounds like Devon's in a pretty good position right now. What's their outlook for 2025?
They've given us some preliminary guidance, and it's pretty optimistic, even better than they initially projected. They're forecasting total production to average around 800,000 barrels of oil equivalent per day. If they hit that, it'll be another record year.
Wow, 800,000 barrels a day. That's a huge number. But even with this strong performance, they must be facing some challenges, right? I mean, the energy sector can be volatile, to say the least.
Of course, no company is immune to challenges. The energy sector is influenced by a lot of factors outside their control. Things like global politics, economic slowdowns, even the weather can impact things. And let's not forget the big elephant in the room, the energy transition.
Right. The world is shifting towards renewable energy. So how is Devon navigating this transition? Are they just going to be left behind as the world moves on?
That's a key question for any energy company these days. And to Devon's credit, they're not ignoring it. They're starting to invest in things like carbon capture technologies, which could potentially mitigate the environmental impact of their operations. And they're also looking into partnerships in the renewable energy space. It's a smart move, showing They're at least thinking about the long-term picture. They're not betting the farm on it, but they're keeping their options open.
Okay, so they're a major oil and gas producer, but they're dipping their toes into the renewable energy pool. It's a bit of a balancing act, wouldn't you say?
Oh, definitely. And it'll be interesting to see how this strategy plays out in the coming years. But this strong performance, this focus on efficiency, it makes them a really tempting target for larger companies looking to consolidate in the energy sector.
Wait, hold on. You're saying someone might try to buy Devon, even with their massive size and all this success?
It's not as crazy as it sounds. Think about it. They've got a proven track record, a strong management team, and a prime asset portfolio. Plus, their focus on efficiency and cash flow makes them very attractive to a larger company looking to quickly scale up their operations and get a foothold in those key basins we talked about.
So you're thinking a mega merger in the energy world. That would definitely send shockwaves through the industry.
Absolutely. And there are some big players out there who might be interested. Someone like Exxon Mobil or Chevron could see Devon as a way to dominate the Permian Basin and get a slice of that efficient production in the Bakken as well. These super majors are signaling a renewed interest in U.S. shale, and Devon is sitting pretty right now.
All right, let's get down to the nitty-gritty here. If someone were to buy Devon, what kind of price tag are we talking about?
It's hard to say for sure without a deep dive into their financials. But a 20-30% premium over their current market cap wouldn't be out of the question. That would put the deal somewhere in the range of, get this, $30 to $35 billion.
Wow, that's talk ticker worthy for sure. But we should probably remind our listeners that this is all hypothetical, right?
Of course. This is just us speculating, having a little fun. Based on what we're seeing in the market and what we know about Devon, this is not financial advice. We're just exploring possibilities here.
Exactly. But it does highlight how strategically important Devon is in the current energy landscape. Whether they become the buyer or the bot, they're a company worth watching closely in the months and years ahead. Now, before we wrap things up for you today, I want to touch on one more thing that stood out to me in this earnings call. Their commitment to giving back to shareholders. Yeah, they're not just talking the talk, they're walking the walk. Their consistent buybacks and dividends really show they're serious about sharing their success with investors.
Absolutely. And that's a big deal in an industry that's often been criticized for prioritizing growth at all costs, even if it means shortchanging shareholders.
Devon seems to have found a sweet spot. Investing in growth while also keeping investors happy. It's a formula that's clearly working, especially if you look at how well their stock is performing, even with all the ups and downs in the market lately.
It's all about finding that balance, and it seems like they've got a good handle on it right now.
So as we wrap up our deep dive into Devon Energy's Q3 earnings call, what's the one big takeaway you want our listeners to walk away with?
Devon is firing on all cylinders right now. They're a dominant force in the energy sector, and their future looks incredibly bright. But remember, no investment is without risk. The energy sector is inherently volatile. So do your own research, consult with a financial professional, and make informed decisions. Don't just take our word for it.
Couldn't have said it better myself. But before we let you go, it's time for our favorite segment. This is not financial advice, where we cook up a wild, maybe even crazy trade idea based on what we've learned today, ready to have some fun.
Always. All right, so we've talked about the possibility of Devon being acquired, but what if they flip the script and become the acquirer? What if they set their sights on a renewable energy company?
Hold on. You're suggesting Devon, an oil and gas giant, buys a renewable energy company. That's a pretty bold move, even for a "this is not financial advice" segment.
Hear me out. They're already dipping their toes into renewables with those investments we talked about. But what if they went all in? Imagine Devon acquiring a leading solar or wind energy company. It would be a huge signal that they're serious about the energy transition and diversifying their portfolio for the future.
Oh, okay, I see where you're going with this. It's a long shot, but it would definitely turn heads on Wall Street. And it might be a genius move in the long run, positioning them as a true energy powerhouse, not just an oil and gas company.
Exactly. It would give them a foothold in a rapidly growing market and hedge their bets against the decline of fossil fuels. It's a win-win, at least in theory.
Of course, this is all purely hypothetical. This is not, and I repeat, not financial advice. Don't run out and buy Devon stock based on this wild speculation.
Absolutely. Do your own research, weigh the risks and rewards, and make your own informed decisions.
Well said. And on that note, we'll wrap up this episode of Talk Tickers. We hope you enjoyed this deep dive into Devon Energy. Until next time, keep diving deep, and remember, always do your own research.